Alright everyone, welcome back to the channel for another Bitcoin update. So, the day of the FOMC is here. We've had our Fed results. The Fed has increased the interest rates by 75 basis points. Now, I've just got out from listening to the first 25-minute talk from Jerome Powell, and not really a lot to report on that. Honestly, I feel like I wasted 20 minutes of my time. They let us know everything that was going on in the first 5 minutes. Basically, Jerome Powell stated what we already know. They said, hey, you know, we were predicting these bad inflations. We were predicting inflation to be through the roof, but we didn't expect it to be this bad. They also said what Jerome Powell, reiterating what he's already said many times, which I've talked about with you, which is basically, hey, if inflation continues to run through the roof, they're going to continue to raise the interest rates. So once again, another 75 basis point increase. This is basically their old reliable at this point. Whenever inflation is too high, back out the 75 basis point increase, and it seems like they've been very committed to doing this time after time after time again. So we'll look at the previous FOMC dates. Let's jump right into the price action to start off with, because if we do hop into the 1 hourly time frame, you can see, you know, what a massive surprise. A huge influx in volume as price action skyrockets through the roof. Who could honestly predict that we would pump on the day of the FOMC meeting? Well, pretty much everyone who's kept an eye on the previous FOMC dates. I've talked about this multiple times before. Basically every single time, or the last couple of times really, because we weren't paying too much attention to monetary policy back here. Everyone became a economist around about this region, so we roll with it. But what we've been talking about is, hey, every single time we have one of these, FOMC meetings, they raise the interest rates, they tighten monetary policy, we pump for over on here. I do want to separate this data point specifically, because this was really a artificial pump. This was the Dogelon artificial pump, where basically money was printed out of thin air. Markets ran up for about a week. We went for about a 27% run to the upside before rolling all the way back over. But you can see our first, or should I say, our 4 most recent FOMC meetings. First one capitulated after a week or so. This one capitulated after 1, 2, 3 days. This one capitulated on the day of the FOMC meeting. What are we going to do this time? Well, what I will say is we are pumping probably a little bit harder than we previously have. I mean, coming back to this Dogelon pump, this looks like the second best contender. And if we take this back up to the wick, we had a total increase of about 6% on that day, and we're up more than that today. I can see that we're up 6% over here, but we did have a wick, and I'm pretty sure we came up to, yeah, almost 7% of an increase. So definitely a massive run up here. Once again, differentiating between these data points, because this was the, basically, we were propped up by the markets from Dogelon's artificial money. But nonetheless, when you do zoom in and see what happened the past couple of FOMC meetings, once again, what a surprise. We're pumping into this, and we're probably going to dump back after this. Now, what is interesting is we're literally coming right up to the previous area that we actually had our FOMC meeting. So, you know, since this date, you know, talking about the 14th of June rather than the 15th when we did have our FOMC meeting, we're the same price as we were over on the 14th of June. And since then, we've had 150 basis points collectively increased within these 2 FOMC meetings. So a 1.5% increase in the interest rates, and we're right back to where we began. So the markets are definitely showing an incredible amount of strength at this moment in time, and there are a couple of things that I would first of all need to see before I can switch bullish on this. Like I've been saying, my friends, until the Fed pivots, until there seems like there's going to be something changing, then I will just continue with my bearish bias. The Fed hasn't pivoted. We're going to find out tomorrow, which, by the way, is way more important than what is going on today. What is the GDP going to be saying? Are we going to have negative GDP? Are they going to change? Well, they're already trying to change the definition of GDP, but nonetheless, we'll see if it changes over on Google. I've been keeping my eyes on that. I've got my screenshots prepped for if they do try and change the definition. But let's jump right into the price action. So on the daily time frame, you've got a decent amount of volume coming in. Over on Bitstamp, at this moment in time, you've got almost 2,000 in terms of BTC bought on the daily time frame. If we come over to Coinbase, you've got 17,000 coming up for 18,000. That's very impressive. Bitstamp again, we just did this one, 2,000. If we scroll down to some of our other ones, I want to find out Binance over here, 157,000. I'm rounding these up to the closest value. Over on here, 147,000 over on Bybit. So definitely some impressive volume coming in over on this. You can definitely tell though the bearish volume is definitely engulfing this one. If you do switch over to the Heikanashis, we are switching green over on the Heikanashis on the daily time frame. So what I would be saying about this trend is, even though I do think this is a fake trend and it has been categorically proved, every single time we have these FOMC meetings, we have a fake pump and we dump afterwards. I wouldn't be going against the strength of the market right now. There's good volume coming in. We are switching green over on the Heikanashis. If we look at some of our other momentum indicators over here, you can see on the daily time frame, number one, we'll talk about this this support box that we've got going on first. Removing the EMA ribbons, removing the VPVR, which by the way we did bounce on. We talked about this previously. We said, hey, this is the next major cluster to the downside. And when we were initially calling for this breakdown, we said, hey, you know, this next major cluster down here, we literally categorically said these exact prices in my last couple of videos. We were talking about these ranges over on the VPVR, and it seems like that is exactly where we've bounced from. Definitely bouncing harder than I would have expected on this FOMC meeting though. So yeah, definitely undisputedly bouncing slightly harder than I thought this would be. Over on the 4-hourly time frame, you can see that we were recently in a downtrend, and technically speaking, you all know by now I'm not the biggest fan of trend lines. I much prefer to look at the data points. What have you got here? You've got a high, lower high, or sorry, lower low, lower high, lower low, lower high, lower low, lower high, lower low. And at least in the immediate short term, you have started to take out, started to invalidate this trend. So I would be keeping my eyes on roundabout here. The next data point up is 23,000. We'll see if there's any other levels of confluence. You've got a VPVR gap round about the 22,800 that will allow the price to fly further, especially if we do get continuation. Coming up to this 23,200 region, you could see that we'd once again be running into this very important bear flag resistance. And I think this is the most conservative way you can draw this. If we remove the drawings for a second, because I remember we had this bear flag drawn a plethora of ways. Coming over on the daily time frame, I think this was what bulls would have wanted to draw from, because this is what I originally had running, which had the most data points. But then you'll see over on the 4-hourly time frame, if you actually eyeball these up, you can see there was a slightly less brutal line of attack. So round about 23,400, 24,700. That is kind of the region where, at least in the next 24 hours, I do see the trend stopping in the immediate short term. So once again, looking at the strength of the market, this volume coming in is absolutely indisputable at this moment in time. The hourly candle, the hourly volume has only just opened in the past 5 minutes, and we're already getting obscene amounts of volume coming in. We're getting continuation. Squeeze mom on the 1-hourly time frame is heading up. Let's head over to our oscillators once more. Daily time frame, and then we'll work our way down. Let's actually take a peek at the weekly. Weekly MACD is about to switch bullish as well. Now it looks like it could take another couple of days, so I wouldn't be banking on this, especially as we have GDP coming in tomorrow. And once again, the trend on the higher time frames, money flow indicators still very flat and stagnating, and the squeeze momentum indicators heading down. So even though a lot of people are getting out of bed for this move, the higher time frame momentum indicators like the squeeze mom are saying, hey, you know, you haven't seen shit yet, nothing's changed. Daily time frame, what have we got going on? MACD looked like it was about to cross bearish, but because we've got a lot of volume coming in, a lot of price action moving up, I would definitely say I don't think the MACD is going to switch bearish anymore. The money flow index, enough said on this one. I've been talking about this for a while, but the longer and longer we lollygag around these levels, the more dangerous it is in the immediate short term for the price action, because the money flow index is heavily extended. The last time it was this overextended was back in March, and I believe we looked at this before. We were around about 48, yeah, 48, pushing up for 49,000 over on the price action back there. Daily time frame as well though, squeeze momentum indicator has headed back up. 4-hourly time frame, money flow index heading up with a lot of room for continuation in the lower time frames, which is once again why I'm saying, hey, you know, this fractal that I hope I haven't lost by resetting my chart. Let me bring this back. Alright, we'll find it in a minute. I think it was this one. We'll find it in a minute. Once again, like I said, the fractal that we just looked at, which once again hasn't changed. It does look like we have these dead cat bounces every time. Would I be shorting these? I would not be shorting right now because, like I said, strength is coming in, lower time frames. It's unarguable that bulls are trying to take control of this trend. So I would give it 24 hours. I would wait and see what happens with the GDP report coming out tomorrow. I have said this many times, but what is going on with the GDP report is going to be a lot more important than what is going on the FOMC meetings. Now, most retail traders don't even know how to define a recession. A lot of retail traders have started to understand what the FOMC meetings mean. A lot of basically retail traders, a lot of random people have just decided that they're now economists in this market cycle, which is completely fine. You know, education around the economy is definitely to be had if you are trading in these markets. But nonetheless, everyone has basically been talking about FOMC. I think these are basically getting priced in, and my opinion on these is by the time you have them on the day, the interest rate hike is already priced into the market. So that is why we have that pump, because we've got that relief. You know, what we were expecting to happen has already happened. So that is out the window. The markets can run free for the next couple of days. But then what happens is you realize, hey, you know, the Fed has been hawkish. And by hawkish, I mean they're committed to tightening monetary policy. They're committed to raising the interest rates to combat inflation. And they've had this same hawkish behavior here, and here. And because of this, once again, everyone knows what the Fed is going to be doing. We all know that they're hawkish. And subsequently, we start pricing in the next interest rate hike a couple of days after the FOMC meeting. And what this means for the next hike is it means the next hike is already going to be priced in by the time we get to this. And what I could imagine we could do is definitely take a big liquidity grab and then head back down to the downside after our GDP report. I think that's going to be the confirmed nail in the coffin. I've been looking at the stock market recently and how it reacted on the day of the recession. I'll probably make a separate video about this coming into tomorrow. But nonetheless, this is 100% to be as expected. Let's check out some other things. Bitcoin dominance. Bitcoin dominance is basically stagnating. Not a lot to report at since the last video. Weekly time frame finally starting to turn up. Have the Heikonashis turned up yet? Heikonashis candles have not yet turned up. Weekly time frame still bearish. So I'll be keeping my eyes on the dominance. It's very interesting to see that this hasn't taken the next leg up very quickly. Over on the DXY, also interesting. They've raised the interest rates. This is bullish for the dollar and this is bearish for the stock market. But once again, because these are priced in, the dollar is starting to come back down, coming down very heavily while it is basically finding support, longing this out on the EMA ribbon. So once again, just like for the stock market, NASDAQ, DXY, I would let these solidify for the next 24 hours while we're waiting for that recession GDP Q2 data. The NASDAQ is looking very strong. So this is really bullish for Bitcoin in the lower time frames. NASDAQ's up 4% today, and it's come back down into the EMA ribbons, bounced from the bottom of this pattern, or rather the top, but it slid through it like a knife a little bit. We didn't fill the gap to the downside in the price action down here, but we do have gaps all the way up here on the NASDAQ, which from where we are now, we talked about this previously, you've got gaps about 18% up, you've got gaps about 12.5% up. So we'll see how this plays out, but the NASDAQ can definitely get more continuation as it is now once again running back up into this resistance line. I think as we've spent a good amount of time around this range, we should slide through these regions like butter and head up to the next levels if that is what we're going to do. So at this moment in time, for me, it's really a no trade zone. In my opinion, I'm very much of the opinion that this is another dead cat bounce. This fractal is going to repeat itself, but more importantly, forget the FOMC. The FOMC, it's been and done. It's happened many times over. I mean, we've seen it, you know, 4 times since March. What have we not seen since March? And what have we not seen since 2008? We haven't seen a recession. This is data that Bitcoin has not been privy to before. Bitcoin, you know, a lot of Bitcoin maxis have been saying, you know, Bitcoin doesn't care about a recession. Well, Bitcoin's never seen a recession. So very foolish to say that. But once again, in my opinion, Bitcoin's looking very, very nice in the lower time frames. We're absolutely zooming through the 4-hourly EMA ribbons. 1 hourly has flipped bullish as you're basically just rocketing through this resistance. Once again, not the biggest fan of basic trend lines unless they've got many touch points backed up on higher time frames of different TA patterns and all of that good stuff. But what I can say is over on this market structure, if you do get a very clean break of 23,000, which is only $200 away from the time of recording this, if we get more volume coming in, which I really think we are going to, markets are looking very, very strong in the lower time frames. I do expect a lot of continuation before we do start to head back down. Now, one other pattern that I would like to talk about, very, very simple. We see these all the time, and it's another one of these Bart Simpson patterns. Now, these Bart Simpson patterns happen. This is an inverse Bart, but if I put it on the regular scale, you can basically see this Bart Simpson pattern, you know, run up to the upside. On the hourly, it might look a lot cleaner. Yeah, the hourly, this looks beautiful. You've got a run up, a little bit of a slanted head, but nonetheless, you've got these little spiky tops up here coming down. And then what do you see? Huge run down. This is how these Bart patterns work. Once again, on the 4-hourly time frame, judging by the sides of the head, it's a little bit nicer. But on the 1-hourly time frame, you can really see that this is a very clear-cut Bart pattern. So I do think the price is going to be magnetized to, once again, we see this price target showing up 23,000. This price target is very important, and in the immediate short term, Bitcoin does get continuation above 23,000. We're going to be clearing areas like VPVR zones. We're already above the 4-hourly EMA ribbons. If we clear 23,000, we're going to be towards the latter half of your EMA ribbons. Specifically, we're going to be coming up to the 50 EMA, getting very, very close to the 55 EMA at 23,500. A solid break above 23,500 and then a break of 24,300 is once again going to be another major zone to have a blast above. If we do clear this on the daily time frame, have a daily close above 42,300, then I would imagine in the lower time frames I would be very, very bullish. However, at this moment in time, I don't want to be too much of a bull. I don't want to be too much of a bear until the GDP results come out tomorrow, which we've been waiting on for a very, very long period in time right now. I'm going to sit on the sidelines. Once again, this is a no trading zone for me. I don't feel the need to trade these markets. I've been in very, very profitable positions in the past couple of months, shorting Solana every now and then. So I'm not feeling the need to trade. I'm waiting for the GDP. I'm waiting for all the information to present itself, just like we talked about on my channel a couple of days ago. There's a lot going on in crypto today. I wouldn't let the first major event being the FOMC sway us in too much of a direction either way. But let's keep our eyes on GDP tomorrow. Quick spoiler, before I do make the GDP video for tomorrow, before we do get the results coming out, if GDP is positive, meaning if gross domestic product, if it's not negative and we're not having back-to-back negative GDP, we're not technically going to be in a recession. So in my opinion, that's going to have a very, very good impact on the markets. Not necessarily for retail traders, but I imagine a lot of institutions, a lot of smart money. This is when you can see a lot of money from the whales flowing back in the market. If we do have that positive confirmation from the GDP, I will be keeping you up to date on this channel. If you do want the updates like that, be sure to head over to my Twitter, because, you know, as you can see here, I was tweeting what the basis points were, you know, the second they basically came out, and then I listened to the Jerome Powell conference, whatever they were calling it. I listened to the Jerome Powell interview conference, whatever. And then I got back to recording this video for you, and then I need to upload it, and then I need a thumbnail, and then I need to post it. So if you do want, once again, the information on what the GDP results are going to be like that, be sure to head over to my Twitter, because I'll be posting it here first. That's all I've got for you today, my friends. It seems like this fractal is probably going to play out time after time again. Let's see what happens tomorrow with the GDP, because in my opinion, this is going to be much more important than what's happening on the lower time frames for Bitcoin. So once again, lower time frames, Bitcoin is looking very, very nicely. And I am bearish in the mid to higher time frames until we get the GDP results tomorrow. But I would not be even thinking of a short position right now. It's very, very clear. It's very evident in the lower time frames. A lot of liquidity is jumping back in after waiting on the sidelines from these FOMC meetings. We've had a lot of positive bounces. You're above a lot of very important moving averages, EMA ribbons. So yeah, 23,000, very important level to flip. If we get a push above there, you're going to see a lot of continuation. That's all I've got for you today, my friends. And as always, cowboy out. Peace.